The next indicator I want to show you is what's known as Macd, and I simply use Macd for what is known as divergence. To load this on your chart on most of the indicators that I will mention from here on forwards is you go to Insert on the top row, you go to Indicators, and then depending on the type of indicator, and in this case it's an oscillator, and then click on Macd. Here I have the settings as 5 for fast EMA, 13 for slow, 1 for Macd SMA, and applied to close, and this is under the parameters tab. I also, on colours, I have black for main, red for signal, and on levels I do have this lot in. Now they don't always show on the charts for some reason, and they're really not that important because it's just the highs and lows I look for. But if you want to copy my charts exactly, then you need to do the following: 0.0015 in here. Remember, to change these you double left click and you can change them, and on the right hand side again you double left click and you put in the descriptions, and I have got 0015, 03, 45, 15, 0, and then minus 0.03 and minus 0.45. As I say, they're not that important. Priority is here under parameters. When you're happy with it, click OK. The Macd histogram has now appeared at the bottom of your chart. How we use it is as follows. This is the British pound. We've been following this in previous videos, and it's clearly in an upwards channel. That is confirmed by the fact that this high here is clearly higher than this high here. However, on Macd, this is a lower high. Therefore, Macd is suggesting that price is going to go down when in actual fact it is going up. We were looking to short here at 160 anyway because of the fact it was previous support and resistance, a whole number, and an intersection with this upper channel line, but Macd had started to give a heads up prior to the move, and is certainly an additional part of the armoury to give us a clue that price may be about to turn back down or certainly stall. This is the dollar Swissy that we followed in previous videos. It's in a clear 4-hour down channel, and we can see here on Macd that whilst price here was making lower lows, Macd was making higher lows. So once again, a downwards channel, a downward move, and yet here Macd started to make a suggestion days ago that price was likely to start to move back up again. Final one for now. This is the Euro Yen on a daily chart. All the indicators, I place more faith in them on the longer time frames. So if you start to see this on a daily, weekly or 4-hour, then pay more attention to them. Once again, we are in an uptrend. We have a higher high, and yet Macd clearly we have a lower high. Price has stalled for the last 3 or 4 days and is attempting now to break back down again. All indicators are lagging by definition. However, Macd, purely from a divergence point of view, does seem to give a heads up to the possible change or stalling in price. The next indicator for you to consider is stochastics. And how you load stochastics, same procedure as Macd. Click on Insert, Indicators. This is an oscillator once again, and we're now looking for a stochastic oscillator. Click on that. And these are the settings. I have period 8, slowing, period 3, which is period D, price field low, high, simple MA, fixed minimum 0, fixed maximum 100, click OK. For colours, so you have the same as me, I use dark green and saddle brown, and to change colours you double click the colour, so single click, and you can have whichever pretty colour you like. I have these lines as thick lines, so we're down on the second choice, and then for levels I have 25 and 75, click OK. The British pound experiment on taking trades simply off trend lines is doing rather well. This move from this morning is now 60 odd pips in profit. The stochastics indicator can be seen here at the bottom of the chart. We have a line of 25 and a line of 75. When price goes above the 75 line, then price is said to be overbought, and we then start to look for clues for price to fall. And when price is below the 25 and crosses back up, we're looking for price to go back up. But this indicator definitely lags, and therefore often the price has moved before the indicator gives any kind of indication. So I use it more on a day chart and just for indications, and when it starts to turn, if price, for example, as here, has been going sideways and sideways, occasionally it will start to make a move before the actual move. But here you had Macd divergence, here you had the lines starting to move forward. So it all kind of adds to the picture. But if I was going to drop any indicator, it would be this one. This is the euro yen on a daily chart we just looked at. We looked at Macd divergence, and here you can see that at that point there price started to turn down, and yet the stochastics hadn't even crossed. Then the move came and stochastics do cross, but it's too late. But when price stays above the 75 line for any period of time, I am aware of it. But for example here, according to stochastics, price was overbought on the 10th of February and continued to be overbought according to stochastics until the 1st of March. So of all the indicators, if I was going to drop one, this would be the one, but I do pay attention to it on a daily. It just gives an added dimension. So far we have looked at support and resistance, both horizontal and diagonal. We have looked particularly for the intersection points of both. We have looked at Fibonacci to give clues on pullbacks for moves back up and vice versa. We have looked at Macd and we have looked at stochastics. I think the best thing that you should do now is, even if you're looking at this as a step backwards and you know more than this, see how accurate this has been and concentrate particularly on the candlesticks. The candlesticks have been hugely significant, and at the moment they seem to be working just simply from candlesticks. But as you can see, when you add different parts to the puzzle, as in here with the intersection of Fibonacci and a trend line, previous support and resistance, there are so many clues that you had here that price was probably going to go back up again. Study this, and then we shall move on and look at some other indicators and other ideas.